Okay, so we were talking about the XLRE. Let's go in and quickly look at the general market now. You know, we're at the point now where, you know, the G20, you know, the meeting's coming up end of the month. You know, people are kind of at a point now where they just don't really want to do anything else. And besides, we're sitting near the top. And so it's like, you know, if I want to invest here, you know, if I'm buying something, for example, and I want to invest here, you know, what's my reward risk kind of thing, right? Well, you know, up here is the top. We're not that far from it. How far could it drop? Well, I guess it literally could go back down here, but, you know, more likely it's, you know, somewhere in this swing point high here, maybe there. So it's like, you know, my reward risk doesn't look that great. Why would I want to buy now? And I think that's the equation. And then the other thing is, we're in the dead of summer. Things get, you know, slow, and you got July 4th next week. Probably money managers are going to wrap it up tomorrow and take off the week. And so I just don't think we're going to have a lot happen, and we're just kind of hanging up here. Nobody wants to do anything from the G20 right now. So I don't think tomorrow, other than volume coming in off the Russell rebalancing tomorrow, which actually was interesting today, because you know, I can't speak to why this is doing what it's doing, but the Russell today, you know, had a big day up compared to everything else. And of course, it's been the weaker one, almost 2% today. So, you know, a lot going on underneath here, but as far as, you know, does it mean anything? Well, right now it just doesn't mean much to me. It's just kind of chopping around. So the question is, you know, what about the G20? And it could be as much, you know, people are blogging, it could be as much as a 10% glitch. I don't know what that means, though, a glitch. You mean that we could see oh, so the volatility could increase to the point where we'd see a 10% up or down. I don't know. That's pretty dramatic. I mean, I don't think so. I mean, seriously, you know, I mean, think about the G20. If there's going to be a surprise, it's going to be an upside surprise, not a downside. Nothing's expected, right? So if we're going to see a surprise, to me, you know, the upside surprise is the surprise. So I certainly wouldn't put a 10% boundary on both sides of this thing. I don't think that makes sense. You know, I think the downside is fairly limited. The only thing that would be different here is that if the meeting went horrible and Trump immediately placed tariffs, which I don't think he even can do because of his waiting period. I think he has to wait until July 7th or something before he can even put the tariffs on, if I remember right. So, you know, I think the upside is the way. And when you think about the upside, if I go back to the S&P chart, you know, it's already sitting up here. So you know, you'd have to get a major breakthrough. You know, they sign an agreement and he takes all the tariffs off, and then, yeah, then you'd probably get a fairly large smack to the upside. Remember also that the downside's kind of limited by the Fed now, because the Fed essentially is saying that, you know, if things get worse, well, in other words, tariffs are applied or whatever happens, right? If it gets worse and this starts coming down, they're just going to come in and cut interest rates and prop it up. So I think the limit, you know, the downside's kind of limited short term just by, you know, the equation that's out there. If there's a surprise, it's the upside. I can't see a 10% upside though. Not like overnight kind of thing, which I think is what you're saying. So let's pop in. We only got 4 charts today. Let's look at these and see what they look like. So one of them, this is American Eagles Outfitters. This is a retail stock, and so this thing had volume at the bottom on the daily, and the weekly. So the monthly is retest regions off of these swing point highs, right, as it comes back. That is one ugly bar though. And then the other second one is here. Now these had already been tested. This one had already been tested once, twice. This is the third time. That's like a death bell. This one had already been broken once, so it's kind of like disregard this one. So to me, even on a monthly, this looks pretty problematic, you know, for lack of a better word. Looks like slowly setting up an ABCD here to go lower. Let me go back to this. So the test here was on this price point, that test 30, 17, 45, but this was the low. Yeah, so it's hitting it with a little bit more volume. Not huge, but a little bit. You know, you could get a bounce here, but more than likely this thing's going to go lower. And it's also in a sector that's really struggling. So this is not some place I'd be fishing. And yeah, I mean, one could look at it on the short side if that's what they're interested in. I mean, because you'll get, you know, if you look at the short side, you're going to get breaks on 2 time frames, right? You got this one, and then when you go to here, you'll have this one if it breaks together. So, you know, if it were to do the break, you potentially could get 2 time frames. That would have to break down to, you know, somewhere in here to break them both. But yeah, I mean, that looks like that's possible, and that could get a fairly large move to the downside. So that's true downside risk. If you're playing it, I'd certainly be looking at the downside, not the upside. Estee Lauder, this is retail makeup stuff. So this gets over this big. So these are not that common, right? When you get these, they're usually, and I always talk about them, right? You get a big spike up in volume, so it becomes kind of a magnet bar if you get back a third of the way into it, which you did here. But usually, you know, you get these big bar reversals. Those tend to lead to, you know, downside stuff, which is what happened here. And then eventually this thing comes back. It doesn't always have to come back, but if it does, right, once it gets inside here about a third of the way up, you know, then you can actually get to the top, and that's what it did. So it gets to the top. So that was kind of short-term stuff. It gets to the top, and then breaks over it now. It's consolidated more than 6 bars, so it should be a buy on the way back, right? But your swing point high is huge. And so, you know, even if you get a third of the way in, you know, it could get you back into this consolidation. So you just have to be aware of that, you know, that. Yeah, so let's look at the weekly. And so here's the weekly, and you get the breakout on the weekly as well, and you have the big bar there too. You know, now you do have a nice big spike bar here, you know, in terms of wide price spread. Doesn't have the volume though. But even if you say, you know, you make it a, you know, here, if you come back now, you could go to the bottom third, right? Which is down around, looks like 171, which is that true? 170, what is that open there? Yeah, 170. Yeah, about 171, which is bottom third, which would make sense with where it should go. Yeah, so I mean, it's hard to trade something like this, right? Well, it is an anchor bar, but again, if you just go strictly with the probabilities, right, you'd probably get a third of the way in. And so yeah, but a third of the way in is 6 bars, right? Well, no, I mean, as it comes back, it should hold in the top third in reverse, right? And so your probabilities are high probabilities, 90% plus, right, that it will turn. But the bar is so big, it could come this deep and still be fine. Yeah, right in here. Yeah, and that's not a bad spot. I mean, again, you're just taking it and saying, you know, where could this thing trade and still be perfectly fine with respect to the model, right? Well, it could trade to the bottom part of the top third, which is like in this area. And that also kind of makes sense when you look here. It also makes sense on this spike up, right? You got all this, you know, you didn't really have volume here, but you had nice big bars on the way up. And whatever was happening here was, there was some, you know, think about how far this went. 17, that's 10% in 5 bars. Somebody discovered something, right? And they decided for whatever reason, this thing was worth buying. And so, you know, if I'm the accumulator in this series of bars, I'm probably going to defend this area as it comes back into it. Right? And so I would expect, you know, at worst, I would see buyers down in this area in this consolidation stuff. Right? Yeah, and so this actually has, you know, has a nice setup if it comes back. Now, you know, one of the things, I've been writing the ABCD algorithms. Finally started coding again, guys. I haven't coded in 9 months. And in some ways it kind of feels good. I was telling my wife it kind of feels good to code again. I haven't done it in so long, right? But you know, there's a certain, you know, after programming for, my God, 35 years now, 40 years, you know, it's almost like something you miss after you're going for a while, right? But as this thing's kind of coming back, you know, if I'm doing the ABC, one of the questions, you know, usually when I write these programs, I ask myself, what are the things I want to learn from this, right? And I list them out. Well, one of the things I wanted to learn was, what's the probability of success when the C point gets redrawn? You know, so in other words, if this comes back into this deep and the C point actually goes here now instead of there, does the probability of this ABCD go down? You know, does it become less? And my guess is it does, but I don't know that. And so that was kind of one of my questions. The other one is just the other question, which is just if it goes like this, goes straight up, versus it takes a very long time to actually get there. You know, is there any kind of difference in that? That was another one of my questions. So these are kind of things I hope to answer. So. Yeah, and so that is another good question. It's like when you have an ABCD structure and you get over this, comparing volumes here to there. My guess is that that is going to be the very same thing as these, where you're going to have a confirmed and you're going to have a suspect, and they're going to have different probabilities, and this one's going to be less. That's my suspicion. And I've said before, even though it's anecdotal, I've used the terminology of the breakout here, you know, when it gets over it, of being now it's a confirmed, right? It's a potential until then, right? But I'm wondering if we can qualify it, which is what you're asking. So, yeah. Yeah, it will be interesting to see that, because, you know, it would be interesting to say, you know, when you get over the B point and you have greater volume associated with it, does the qualification of it, you know, when we qualify that particular breakout, is that breakout confirmed or suspect, right? It's the same idea, just in a different form. And I don't know the answers to that, and that'd be curious to find out too. I'll have to check and make sure I got that one on my list. I think I did. Let's go to the next one here. So this one's good. It's just hard to put risk reward on it. If you do it on the daily, it's okay, which is what you were looking at, and you use this consolidation area. If we go to the next one, now this one was interesting. I saw it and I popped it up and took a quick look at it because, you know, as you know, I do the professional guys over in Europe. And this one I speculated on, and there we do weeklies and monthlies mostly. I don't hardly do any daily stuff for those guys. You know, they have big funds. They don't move daily stuff around. On this bar up, and I do it on a weekly. On this bar up, we bought it right here. And we did it because we were anticipating a breakout here, potentially the breakout there, and a pushback to the top of the breakdown bar, which is 371. And so if I was doing risk reward there, you know, my stop with them was down here at the time, and the ideal is to come back up here and test this. And so you have about a, you know, it was about, I think it was 1.2 to 1 or something. But it was pretty high probability, and if you got the breakout, it was very high probability. You know, the probabilities increased. And that's what happened on this. And so we're looking at this long here is why we're bringing it in today. I'm just letting you know I anticipated it back here because it was going to be multiple time frames. This weekly. Yeah. Yeah. This was the Friday bar, and now that I look back at it, it was actually, I was anticipating a breakout on multiple time frames. I forgot that was what it was because that was this one, and I was thinking this one could break too. So going back to it, it's like, how do you play this thing? Yeah, it's a weekly breakout that you're interested in. I mean, the daily chart that you're interested in. You got your breakout here. Let me see, this thing was 340.43, so it just didn't test. And so it would be more than 6 bars coming back into this guy with a huge volume bar here, not so much volume, but wide price spread bar, anchor bar, and the consolidation that took place right here, right? So to me, anything that comes into this area is not a bad play. You should at least get the bounce back up for, you know, a decent gain. And so, yeah, I like the trade. I still like it. That's good. And, you know, I don't know that you can, you know, these things, when you get them like that, let's say that you buy this thing and you're fortunate and you get it right here or something, right? You see it test and you jump it as it comes back up. And it comes back up, consolidates, whatever, and then eventually breaks out, right? There's nothing to stop it. You've got a good entry, and then you just change your stops, your targets, and just let it go. Right? And then you've got this big structure, right, that could end up huge over time. And like we just talked about, the healthcare looks kind of interesting right now. Well, you got the earnings at the end of the month. You're going to have earnings on anything you're doing right now. The thing into earnings is that if you get the push, and especially if you get over here, if you get over the top, you just hold through earnings. You know, because you've got enough cushion, right? And you take your chances. You know, more than likely you don't get. What's that? Oh, sell before earnings. Well, yeah, but I mean, you can't sell at everything, right? Otherwise, you don't have anything. But yeah, I mean, this has also had a huge run already, right? So, you know, it might make sense. This is definitely playable, you know, if it does retrace, which it may or may not, right? But if it does retrace into this area, this is a good probability bet for at least a bounce back into this area, probably in front of the earnings, you know. So that's the way it would look to me. Last one, SON. This is Sonico. This is, I don't know if they're refineries or just oil or, oh, plastics. Yeah, you told me that. So last week we looked at it, which would have been right in here probably. Whoa. Let me see, last week would have been in here somewhere. I don't see the gap down you're talking about. Yeah, but the 24th would have been after we talked. That was Monday. Yeah. Mm-hmm. Oh, and you were just trying to decide whether it was worth it when it gapped down into it. Oh, yeah, I don't worry too much about gaps, guys. Gaps don't bother me, really. So this one has retest region here. There's another one there. This one never tested, this lower one. The higher one never tested. Yeah, this should get bought. Now, you had heavier volume again today, even though it's a hammer. But this is the sort of thing where you can bend the rules a little bit. You just say, you know, remember on this kind of a setup, you know, it should, your ideal entry is the bottom of the bar preceding. So 63.56 and 63.56 over here. Top of this bar 62, bottom of that bar 61. Yeah, this is, if I were playing this thing, I'd probably play it on 2 time frames. I'd play a short-term time frame using these, and I'd probably hedge and play a longer-term time frame saying, you know, I don't think it can break this stuff down here. And so I'd probably buy into it and, you know, split it into 2 camps. And if I were able to get, you know, the position I wanted, you know, let's just say I got, you know, 100 shares total, you know, I would sell 100 shares back into the test of this if it fails, or even here if it fails, you know, as it comes back up. I'd try to get as close as possible to here. And I like the trade. I mean, I don't particularly like the initial setup here, but given these tests, the fact that there's 2 of them, and when I look at the weekly, the way it looks, and I'd flip out half of it here, and I'd let the long side of it just run, you know, the bigger position. And then I'd see if it comes back and what it does, if it does, and either add to it or rethink this one if I'm wrong. But I'd take my chances on it because I doubt seriously it's going to get down to here before you get something up here. So the odds are pretty good. You at least break even, worst case, with 2 bids split. This is a breakout up here. Yeah, I don't know. This is a nice looking chart still. So I kind of like it. I like the way these line up. You got a nice high volume, kind of a wide price spread bar. Probably not. There's too many wide ones in here. This one's probably wide. So you got a nice volume chart bar there, wide price spread bar here. You know, so in our ranking system, these are pretty good bars, right? This one, they're both close to time and price, and they both have 2. Well, this one has 2, you know, swing point high and a volume bar. This one has just 1. But it's a good setup. It is too tight. So the question is, you know, if you put, you know, let's go back and review it. The first thing to do is to always ask yourself, what is a stop for, right? And a stop always has to be viewed as where I know I'm absolutely wrong, right? And so what I said a while ago is I'd probably break this trade up into 2 trades if I were doing it personally. I'd have an intermediate term time frame and a short term time frame. Short term time frame, it should, you know, the bad thing here is it's already done something it shouldn't do. It's already traded to the bottom of this bar. It really shouldn't have, right? It should have only did the top third. The second one, it's kind of in about halfway, so it's a little deeper than it should be here. So it's already done some stuff that it probably shouldn't have done. So that's the bad part. The good part is there's the fact that there's two and it's the first time back, and you got the weekly chart supporting it. And that's why I was saying I'd probably break it into two, put half the position on here, right, and then put the other half as an intermediate. The stop here, you know, how tight do you have it? And you're saying you would have it just up underneath this. I think that's too tight because, you know, even if it got down here, assume it's one trade and you're just doing the daily. Even if it got down here, is it a broken trade? Well, the trade you were trying to make is broken, but that doesn't mean the stock is just going to continue down. Odds are it's going to loop back up, right, and you can get out and still make a profit probably if you were to buy at this price point. So what you're really trying to do is you're trying to say, you know, where am I absolutely wrong? And if I'm asking that, you know, these bars over here, this area here is kind of a spot it really shouldn't get under. So I'd have my stop down here somewhere. You got to give it more room. If it gets down this deep, something's, you know, without any kind of a balance, right? Something's definitely wrong. Now, what Matt always does is he looks at this, if he was to take this position, and as soon as this thing turns, he comes up and says, okay, let's bring the stop up here now. And that's exactly what you should do. You first start out and say, you know, if it does, let me do it again, clean it up. You buy it here, and let's say the next two bars are like this, right? And it's up to this area. What do? You bring your stop right up here, and you guarantee you're not going to lose, right? Because it really shouldn't come straight back again. If it does, then it's definitely weaker than you want it to be if it can't keep going and get up into this top and test that high again. But if it does, if it takes the opposite case, right, and that is that you buy it here and the next thing you know it's down here. You've got your stop deep, so your stop's, you know, down in here somewhere, and you're saying, you know what, if it gets this deep, I'm absolutely wrong. I just have to leave. Because the odds are is that what's going to happen, even worst case, is you get a little ABCD down to here and flip around and come back up and you get out for nothing because your trade changed on you. It didn't do what it was supposed to do. So now you know that what was up is sideways. That's not the trade you were trying to make. You were trying to make the up trade, right? So change your trade. Take it out where you can, either small loss, break even, or a small profit, and move on to something else. If it keeps going, you know, that's just the way it goes. You know, it turned out to be not what you wanted, but yet, you know, people came back into it. Well, that's the way it goes. I'd rather not risk it knowing that the market's already told me that it's not up, it's probably sideways. And I bet you, even in that case, even if it came up and just kept going, it'd probably loop back over and come back down again. That's what they almost all do. And so what looked short term to be, oh, I was wrong, you know, 2 weeks later is back where you were. You know, so you just change your trade, you get out, and you move on to something else. It's okay to buy a trade like this, right? You just have to manage it. So you put your stops deep. If it comes straight down, you're still not wrong until it, you know, gets down here, and it's the, you know, if it gets down there, I'm just absolutely wrong. I got to leave. If it doesn't, and it shouldn't, you get some sort of a bounce back up, even if it's weaker than you think. Trade changed, get back out. If it does what you expect, you get in and it climbs back up, or you bring your stops from here, bring them up there and protect it. And then make it go. All right? All right. All right, guys. I got a dinner to go to for the graduating daughter. So, yeah, after 8 years of sending her to school. Yeah. All right, guys. Take care. Bye-bye.